Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this is for Wednesday, the 8th of January, 2025, 6:35 p.m. Central Time. We have data coming out tomorrow, and the data starts off with the Challenger Group at 6:30 in the morning. Philly Fed President Harker, Schmidt of Kansas City, Richmond Fed President Barkin, all speaking tomorrow. We have President Biden, who today decided that it looks like he wants to roll out tiers. Could be 3 different tiers from what I'm reading, as to who gets AMD and NVIDIA chips of certain types of chips. Are you an approved U.S. user? Suddenly we have to approve all that. What makes the approval? What do you do with the chips? So on and so forth. So it looks as though another hurdle is going to come for President-elect Trump. At the same time, the markets, as you know, they're fretting, and I don't blame them. What tariffs are coming? How many are going off of President Biden's presidential orders the very first day? What happens with immigration? There's scariness out there, and that the stock market just can't seem to get going in any way because of it. We saw the other night, Jensen Huang came out. I think I'm saying it right, Yuan came out, and he's saying that quantum computers are maybe 20 years away from being really effective. That tanked a sector of the market. If you go to the quantum computer stocks, some of them down 35% today. I mean, huge numbers, not a small, oh, they're down a couple of points. That isn't, percentage-wise, it was very big. The dollar got a bit at the expense of currencies, and if you're an experienced currency trader, you're probably getting your head going, what the heck, which way is this market going? It's one of my favorite markets, and I've been having troubles with it. It starts and stops abruptly, and that's been the problem with the market overall. It's in broad swaths right now, and it probably won't end that way anytime in the next 10 days. Why do I say that? Well, you want to get into the inauguration. You want to get through Friday's jobs report data. That's going to be an important piece of information. Remember, we have an abbreviated trading session tomorrow. So you're open tonight for trade. You'll start closing tomorrow at early hours. Markets will be done in futures around noon Chicago time. I'll give you an approximate. I've sent out those hours to everybody. And then we'll start reopening at 5 p.m. Central Time for the normal Friday trade. All right? But the stock market will be closed. And I'm talking the real stock market. So you're not going to have the NASDAQ, the New York Stock Exchange, none of that will be around. All righty. So when I look at the S&P again, we're down for the week so far, 0.8%. Coming in, will we hit the 5,900 level again, that 18-week moving average of closes? We might. When we take a look at the first 5 days of the year, I told you I'd follow through, and I won't follow through with this tomorrow. You did post a gain for the first 5 days of trade in the S&P. So according to Yale Hirsch, the Stock Traders Almanac, that one indicator points that the market will be good by the end of the year, quote unquote. Right? Nobody can see that far ahead, but when you go back and you look at the stats, it's been pretty good. But remember, the stock market is up more years than down years anyway, so there's a certain element you got to take into that. You do have a pattern of higher lows, but you also have lower highs at work right now. The market seems to be caught in just what we've been talking about. So far, the support's the 100-day average of closes, and the resistance is the 18, and you're narrowing in like this. If it keeps going, it'll get finer and finer to a point where the swings aren't as broad when it breaks out. Now, if it wants to break out of here, I guess it would have to get under this low that I'm pointing to right over here in order to say there's any real move on it. And if it did that, it would be quickly down to the 58.61 level, the lower Bollinger Band, through that last important break low. To get the market up and going, you have to hold here and then get back over at some point 60, 68. These are all doable numbers. They're not that far away. When we look at momentum, it's useless to me right here. It's sort of just drifting, tries an up, comes back down, but the bias is staying down while the swing line has got a legacy of up, a difficult market at the very least. When I'm looking at the NASDAQ, what you have here now, I can make an argument now of lower highs and higher lows, okay? That's what you got so far. We'll see what goes on. When we come to the Dow, the first 5-day indicator, again, showed a very minor gain as I'm looking at it. So maybe that one also is going to be okay. When you look at the Russell, it's not one of them that Mr. Hirsch ever did anything on. You had rallied 2 days ago to the 100-day average in green in the 18 and you ran out of momentum. The market today was down again. Let's see, how much did it finish off? Because a number of the others were up. It was up down 0.5% as it turned out by the end of the day. In the note market, will you be going down and visiting the lower Bollinger Band and the same in the 5-year? These are the big questions the market's got to ask and answer. In the dollar index, maybe you get to the upper Bollinger Band, 109.37. I have a price count, and I've mentioned that to you, in the 109.80 zone. Could be headed to that number, but I think you're in a big, rough area here. You're overbought, you're approaching the Bollinger Band, and it seems to stop the market on the rally so far. I'm not bearish. Don't you put that word in me. I'm still in the bull camp. Eurocurrency, lower highs, lower lows. Will it go to the lower Bollinger Band again? Now, this market has worked itself out tonight of no longer being oversold. So rallies here probably do get sold by the pros. The question is, how much of a rally can you get when you know you're going to be closing early tomorrow? I don't know. In the British pound, right back down to the lower Bollinger Band. So you hit the band, you bounce, you hit the band, you bounced up this time to the 18-week average and fell instantly right back down. The word is that the Bank of England wants to cut rates. That's part of what is going on here. Bitcoin. So the big question is which way? Now, one of the biggest bulls from FactSet is Tom Lee. And I just heard him today on his interview saying he wouldn't be surprised, number one, that he had $250,000 this year. Now, last year or the year before, he was talking $1 million. So he's lowered that. I watch his interviews all the time. I happen to think he's a very good technician. Second part. On this break, he wouldn't be surprised if you get into the 70,000 range. So he might be talking there. I follow my own work, and my own work is void of a trend here. I see a lower low, higher high. When it got here, I predicted that you'd get a break that could be near 20%, and you got it. You got just what I was looking for. I'm sort of in no man's land right now. Now, keep your eye on Brent. Something interesting is happening. The front month is now got one of the widest premiums over 6 months back that it's had in quite a while. That's called tightening, and that means that people want immediate delivery. Why is the market tight? The word is that the smart money thinks China will make an announcement that will get oil demand going again. That's what I've been reading. I read like mad, and that seems to be it. I don't know. I see a market that is losing the bullish embedded reading. Let's come to the close today so that we can see what I'm talking about. It was 80.77. Now tonight, I said, is losing. You got to get through tomorrow. If the market loses the embedded reading, it either re-embeds on Friday instantly, or this market's likely going down and probably back to at least the 18-day average of 74.29, and it's in a precarious position. When we take a look at WTI, here you lost, past tense, lost the bullish embedded reading, and unless tomorrow it immediately gets it back, the odds favor it's going to 72.63 before it goes up for a new high now. Doesn't mean I'm right, but that's what my work would call for. When I look at heating oil, you're flirting with losing the bullish reading, and the market stopped right where we've said each night. I thought it would have trouble at the 200-day average in the upper Bollinger Band. And in that gas, I was actually hoping for the market to get down here for a better buy. Now, you had a bullish crossover takeover tonight. Where now you're getting the 18-day average crossing the gray, which is the 200. So that's a friendly number. That's where I think the pros will nibble into the buying in the 340. They won't want it under this number if they're going to stay bullish. Is there another problem at work? There is. You still have lower highs. So while you have higher lows, you have lower highs. And the bigger picture is you're doing that. You're narrowing in like such. With thin volume, it's probably a good time to keep your hands in your pocket and not try to be a hero in these markets right here. Want to remind you that I know a lot of you use a charting service besides ours called TradingView. And if you use the TradingView suite, we make all my indicators as a package available. So you get the swing lines in the package. You go to the moving averages, the different ones I use, they will be there. Bollinger Bands are strict as they are, but you get my version of slow stochastics. You know I'm going to use window envelopes on it. And I highlight outside days for you automatically. You can turn any of these features off as well. But they're so important that I think you have to use that. It pairs together with the courses that I have, so I think you'll find that this is a natural way to go with it. So how do you get all this? It only takes up 2 slots, by the way, so it doesn't take a lot of room on it. You go to iraepstein.com. You don't go to TradingView to get it. You go to us. On the top right, you're going to see Client Resources. Hit that, the drop-down window, sign up for the indicators right there, then we'll turn them on, send you an email. You log out of your TradingView, back in, and bingo, they're on your chart. You can turn them on and off. It's that simple. Give it a try. I think you'll like it if you're using TradingView. I'm Ira Epstein. You have yourself a great, great evening, and I'll catch up with you tomorrow. Take care.